Welcome to RFI's Banking Uncovered, the podcast going behind the industry PR, the media spin, the product awards, and the investor reports to look at what's really going on in the customer data, and to ask global thought leaders about their thoughts and views on the future of banking and payments.
Welcome to RFI's Banking Uncovered, where this episode I'm delighted to welcome Natalia Goh from MariBank, a digital-only bank in Singapore. After a long and stellar career at Standard Chartered, one of the oldest and most established banks in Asia, Natalia left a few years ago to Trust, a digital player, and has now gone full into digital-only, joining MariBank just over a year ago. So welcome, Natalia, and thank you very much for joining us.
Hi, Charles. Thanks for having me on the show.
Fantastic. So obviously you're drinking from the Kool-Aid when it comes to fintech and digital-only banks because you're the CEO of MariBank. But a lot of conversations have been that 2025 after 10 years is finally the year of the fintechs and the neobanks and digital banks where they've come good with really amazing numbers from the likes of Revolut, Monzo, and Starling. And in the UK, we've seen them grow from 2-3% to 54% of the market are now using them. In Singapore, that number's not quite up there yet, but it's already up to 15%. So given the fact that Singapore is so digitally advanced as an economy and is quite a crowded banking space anyway, just talk us through the landscape as you see it and why you think there's a play for a digital-only bank, and do you think we're going to get those kind of numbers over the next few years in Singapore that we're starting to see in other markets that have got digital-only banks in?
Yeah, sure, Charles. I think let's unpack this question a little bit more as there are quite a few considerations in here. So I think let's start with that question about whether there's space for digital banks in Singapore, given that it's already sort of a well-banked market and also digitally advanced. I actually get asked that question a lot. And how I answer it is really that while Singapore is well-banked, there's still several sort of underserved banking needs. So I wanted to give you a flavor of that. So when we were launching the bank, we conducted extensive customer research to better understand banking needs in Singapore and to identify areas where established banks may have overlooked. And the findings were actually very clear. I'll share some of these findings with you. So one, customers were sharing with us that they are tired of banking fees. So we saw 63% of the customers were surveyed who were highlighting that annual fees and late fees were one of their pain points with credit cards. The other interesting fact that came out in our studies also was that 1 in 3 businesses were choosing to use their personal banking accounts instead of business banking accounts because of the high fees and transaction costs associated with business banking accounts. So clearly, even from this, these little bits of data that I'm just sharing, you see that there are opportunities for sort of improvement or for disruption in the banking industry. So I think this kind of answers the question, saying, is there a space for digital banks? Yes, there is, as long as they're bringing that value to users, as long as they're understanding where there's friction, where there are pain points, and directly coming in to address those pain points. And then more broadly, for your broader question about kind of the overall landscape in Singapore and what's been happening in the UK, will Singapore sort of mirror the UK model? I don't think so. I think Singapore will chart its own path. Here the real adoption sort of for digital banking is really driven more by trust and functionality than novelty. And I think the other thing that you see in Singapore is that if you look across the digital banking landscape and you look at the players here, you'll see that all of them are part of a larger ecosystem. So MariBank is part of C Limited, which is Southeast Asia's largest technology company, and also has divisions in technology, in gaming and in e-commerce. Then if you look at the other digital players, for example, GXS, they're part of a ride-hailing ecosystem. And then if you look at Trust Bank, they're also part of a supermarket chain ecosystem. So I think this is a little bit different than the Monzo and the Revoluts in the UK.
You mentioned consumer dissatisfaction with fees, and one thing we know from RFI Global's data in Singapore is it's not just dissatisfaction with fees; it's dissatisfaction with the transparency of fees. And the three biggest drivers of lack of customer satisfaction in Singapore are, as you said, the transparency of fees and the fees, the ongoing innovation or lack of it, and then the attractiveness of reward programs that are being offered by banks. So obviously reward programs are great. They're a great way for acquisition, but they also do have a cost that comes to them. So given the consumer desire to have really great reward programs, how are you thinking about that as you start to roll out the proposition for MariBank?
Yeah, no, so I think, Charles, the pain points that you kind of like shared, from your own research that you've seen, sort of resonate. And actually, they're very similar to what we've identified from our own user studies, right? So at MariBank, we do a large scale study annually, so covering close to 2,000 users. And then we do sort of smaller focus groups throughout the year. So I think to address one of the points that was raised, which is around sort of rates and transparency. So I think in the Singapore market, I think generally this is true everywhere. Customers are seeking high rates. And at the end of the day, it's their hard-earned savings, but they also seek transparency. If you look at a typical savings account in Singapore, it takes actually a little bit of work to figure out how much interest you're earning. So if you look at a typical structure in Singapore for a savings account, it starts with a base rate, which is typically very low. Then you ladder up and you can earn a higher interest rate when you perform different activities, like making recurring deposits of a certain value into the account, maintaining a minimum balance in the account, buying an insurance product from the bank, making a certain number of payments every month, referring someone to open a bank account, and so on, then you get to a very high and attractive interest rate. So from a bank's point of view, this makes a lot of sense because you're rewarding a customer who does more with you. But for customers, customers who meet all these different conditions, it's also great because you get to earn a higher interest rate. But I think the challenge is really that even then, you don't really know how much interest you're earning because it's not fully transparent. And the interest that you're earning may be credited 1 month or possibly even 1 quarter later because a lot of these conditions require you to kind of do certain activities over like at least a quarter. And then, of course, there are customers who don't meet these conditions and then they earn a very low interest rate. So this is a very sort of real pain point, I guess, in Singapore. And how we've tried to address this at MariBank is really how we've designed the product. So the first is around sort of the UI UX that we have in place within our banking app. It's actually very clean and very simple. And we do this thing called daily interest crediting. So every day you open up your banking app, you're able to see the interest amount that you've earned that day. So that this is very real, very tangible, very transparent. The other piece actually is around kind of how we've kept the banking account structure very simple. So unlike a traditional bank where there's many different tiers of interest, we offer like a simple competitive interest rate that everyone gets, and you don't have to sort of jump through any hoops to get that. And I think the third really is that for MariBank, there's no minimum account balance that you need to keep. So basically, from the very first dollar that you put in, and that can be all that you put into the account, hopefully not, you get to earn that competitive interest rate without jumping through any hoops, and you get to see that interest rate in your account every day. I think back to the point that you raised around sort of the high, sort of like the rewards program and how that's a major driver for consumers in Singapore. It is very common in Singapore to see these very high headline rates in terms of interest rates or very high sort of like rewards or that customers can earn when they sign up for a bank account. So that is quite common in terms of in the marketplace in terms of encouraging or getting customers to switch over bank accounts. I think the way that I see it here at MariBank is that yes, that's important because it is a pain to switch over to a bank account. You're compensating customers for some sort of hassle they have to go through. But at the end of the day, what keeps that customer, what keeps that banking relationship, and what makes it sustainable is if you're providing true value to the user. If the user can see that true value, if it's something that's ongoing and it's not just kind of one time getting them to sign up, that's where you really get to keep and cultivate that banking relationship. And that's kind of what we're aiming for here at MariBank in terms of how we've designed these reward structures, how we've designed the whole interest rate program for our banking account.
I want to talk a little bit about the market as a whole. So from my Global's data, obviously interest rates globally are starting to come down, and as you say, consumers are always looking for the best possible rate for their savings and for their wealth. And we know that the emerging economies in Asia, the economies in Asia, Hong Kong, Singapore, Taiwan are amongst the highest in the world for investment appetite for 2026. So this is where consumers are going to be spending the most money investing in new products, and Singapore is actually the highest not just in Asia but in the world. So great news. There's a huge pie that's growing bigger and bigger, but at the same time, the relationship manager, the human element that is so often involved in advice and wealth, is the cause of really significant dissatisfaction amongst consumers, which presumably creates opportunities for digital only players like yourself. So how do you think that could benefit yourself and other digital only players, and how are you thinking about that space at the moment?
Yeah, so I think to your point, Charles, we do see investment products or sort of wealth management products as an opportunity in Singapore. And the question for us as a digital bank really is to say, besides the traditional sort of high touch relationship manager model employed by traditional banks, are there different additional ways that we can serve the investment or wealth management needs in Singapore? And can we leverage the digital platform to do things differently to meet the needs in the market? And I believe the answer for that is yes. Right. So if we look at, again, it's been a short history for us at MariBank, but if we look at kind of what we've launched so far on our platform, so to date, we've launched a couple of investment products on our platform. We're seeing very, very good traction with these. And these are just fully self-service type of products without an RM involved. So the two products we have, they're both Singapore dollar denominated funds. The first one is MariInvest SafePlus, which is a money market fund. The other product is basically MariInvest Income, which is a global bond fund that gives regular monthly payouts to investors. When we did our research, what we heard from our users was that 1 in 3 were looking for sort of low risk investment products. They valued education, so they want to do self-service, but they also wanted to be educated about the product. They were seeking like regular payouts. They wanted to know that their money would be protected. And when we launched both of these products, it was really to address these needs that we saw. And again, to your point, right, with the changing macro environment, with the falling interest rate environment, we do see more users kind of seeking these kinds of higher returns for their savings. And I think these two products have really kind of proven how that's been able to be served through a digital platform.
Okay. When we look at the data, we can see in Singapore that currently, I think 40% of consumers use digital investment platforms. But more importantly, more challengingly, 50% do not and don't intend to use digital investment platforms. There's concerns there. So obviously we've spoken about how you're looking to maximize the opportunity of the 40%, but what about the 50%, the reluctance of the 50%? How do yourself and the industry as a whole go about engaging with them and getting them to overcoming their reluctance to use digital investment platforms?
I think I see this reluctance to sort of start investing on digital platforms arising from maybe what I might call like sort of two different hurdles. I mean, they're related. So the first one is really the hurdle to overcome in terms of just getting started with investing, right? So this is not so much maybe a lack of willingness to start investing, but perhaps a lack of knowledge or a lack of options for beginners. The second hurdle then is after you've overcome the first hurdle and you've decided that you will start investing, then there are sort of very practical considerations. Which platform do you use? How do you actually get started on investing? How much money do you actually have to invest? And so on. So again, here we're talking about this 50% of consumers who have not, and at this point, do not intend to use digital investment platforms, right? So of course, for those who are already using platforms, the considerations will be different. So when we think about this here at MariBank, what we're trying to do like strategically is really to build an investment solution in a way that empowers the customer, right? So if you look at the model that we've rolled out so far, so first we start with like a small curated set of investment options. So the user is not overwhelmed with like a long list of different investment options, right? So we offer 2 funds now. Each fund that we offer has been selected for being best in class. And the way we presented these funds to the users, we don't use complicated jargon. That's the first one. Secondly, what has really worked for us is how we've designed the customer journey to be very simple and accessible. So if you look at our investment options, you only need $1 to start investing with MariBank, so 1 Singapore dollar. So if you compare this to the minimum investment requirement at most traditional banks in Singapore, the minimum amount is $1,000. So that's $1 to start versus like $1,000 to start. And even if you look at some of the other digital sort of fintech investment platforms, fintech players, typically the minimum sums are at least $100 to $500. So with this very, very low ticket sort of minimum sum to invest, you're addressing one of the barriers to say, hey, let me just give it a try because the amount's small. I'm okay to start trying at that amount. The other thing that we offer also is instant liquidity. So what we've done is we've built the structure internally to basically for our entry-level product, which is the money market fund, you can buy and sell in real time instantly. So if you need to sell out of the fund, you can do that redemption in real time, of course, with certain limits, right? So each user has some limits that they can do. So this instant sell. And again, if you compare this to traditional sort of investment options, they typically take 2 to 3 working days to settle. So again, we're trying to give customers that assurance to say, hey, just give this a try. We know that it's not easy to start investing. So we want to give you that peace of mind. We want to give you that confidence, just to try out investing at an amount that you feel comfortable with. Right, so this is the approach we've taken so far. And actually with this approach, our very first product, which is that money market fund I spoke to you about, MariInvest SingPass, within slightly more than a year after launch, we've kind of achieved more than 1 billion Sing dollars in assets under administration. And we've also reached that position of being a top 5 Singapore dollar denominated money market fund. So I think that's been quite a good achievement for us. We're happy with that. But I think it also speaks to some of those investment barriers that we were trying to address with how we've designed that product.
Okay, so a focus on simplification as an acquisition, as a connection tool.
Yes.
Okay. When it comes to digital, I mean, this always happens with any new technology. Obviously, one of the concerns is security. And you go back 20 years, you had this with contactless. When we first had mobile and smartphone banking, there were concerns about security. And security has become more and more to the fore as fraud and cybersecurity have become big issues in every